With China on track to become the first country to launch a digital version of its currency, my guest today says there lies a great danger in this. Please welcome to the show Tomas Forgac. He is a frequent contributor to the Mises Institute, and he considers himself a big proponent and investor of Bitcoin. Tomas, welcome to the show.
Thank you, Daniela, for having me.
So I read with great interest an article you penned exactly on this topic. 3 reasons why central bank digital currencies are a very bad idea. Let's flesh that out here. So with China on track to become, as I said, the first powerful country in the world to release a digital version of its currency, let's talk about why you think this is a very bad idea.
Well, it's not a coincidence that China is the leader of this because it very much fits their overall long-term agenda of total control of all the aspects of the economy and lives of their citizens, because it gives them, first and foremost, I believe, for Chinese government, the great power of financial surveillance over every transaction in the economy, and also which is very attractive, I believe, for the Western governments to inflate and to impose negative interest rates.
So let's talk more about, the other reasons why you don't like central bank digital currencies. You mentioned lack of control, but what are other reasons?
To start with the design of the currencies, which is partially inspired by cryptocurrencies, but taking one important aspect away rather from it, which is the permissionless. So by using the single common distributed ledger in a permissioned manner, it gives very, very large control and also data access to the one who is issuing the permission and who's controlling the network. And as a result, they can run, pretty sophisticated and detailed intrusive financial surveillance over those data. And also they can much more easily impose negative interest rates and also drop helicopter money, if you will, than they can right now.
But on that point, people would say, but we're already living with helicopter money and zero interest rates. What difference does it make?
Well, not so much, because the central banks find it hard to impose the inflation, on the economy, because the commercial banks are still standing, in between. They are still there to issue credit based on the monetary policy that the central bank imposes. And the same with, or similar with negative interest rates, people still have cash to protect themselves against it, and the commercial banks partially consume those negative interest rates on behalf of their consumers.
Is this a play for China to end the US dollar monopoly?
If so, then I think it's a bit misguided. So look, I don't want to talk politics here, but technically it could work and it could be superior if they were not abusing the power that it gives to them, which I highly doubt they will not do. So in my opinion, this, if anything, will make it worse for them, because it will make Chinese yuan even less attractive due to all these issues it will face.
If central banks rolling out digital currencies will impose greater restriction and have greater surveillance on individuals, will this make a greater case for Bitcoin, Ethereum, etc.?
I believe so. Actually, my original thought about writing that article was to write it very optimistically, that I wanted to thank central banks for promoting Bitcoin and Ethereum, because with these currencies, they will, I believe, flip a switch in a way in many people's minds, and give them the notion that these currencies are kind of natural, that money is more and more digital. And once people see issues with these currencies, it'll be also easier for them to switch to the true scarce, the cryptocurrencies.
I find it really interesting, Thomas, how, I believe this will be marketed like, behold, the future of currencies. But meanwhile, we're losing more and more control as individuals. So how can investors and, just the general population really protect themselves?
You're exactly right, Daniela. I think the best way is to minimize your exposure to fiat, diversify to, of course, cryptocurrencies, to gold and gold-related assets, and to any counter-cyclical assets, perhaps outside of the economies that are most dependent on these mostly mismanaged currencies.
Before I let you go, Thomas, I know you obviously have Bitcoin, you have gold, but what do you do? What are you doing now? Are you adding to your allocation?
I'm continuously adding my allocation of crypto, mainly Bitcoin Cash, gold related assets, and others.
You know, a lot of people would say, well, Bitcoin's too expensive now to get in.
Well, you can always get a small fraction for one. I strongly recommend. I personally hold vast majority of my crypto in Bitcoin Cash rather than Bitcoin because of the certain advantages that it has. And I always recommend price averaging. Just decide what what percentage of your monthly or annual income you want to put into it, and do it continuously on a weekly basis or monthly.
Point made. Thomas, thank you so much. And on that note, I'll wish you a very happy holiday season. Thank you so much for joining us.
Thank you, Daniela, for having me.
And thank you for watching. We'll have much more for you, so be sure to stay tuned to Stansberry Research. In the meantime, you can follow us on our social media channels. Thanks for watching.